A U.S. Personal Income Tax Guide. Chapter 1. Taxes 1. General information. This is not an activist book against taxes, but a sovereign nation has the authority to create its own money out of thin air. It doesn't need to borrow it. We live in a government system where private bankers own the Federal Reserve, which creates money out of nothing, lends it to the federal government and expects the federal government to pay them back this money with compound interest, which is why you pay income tax. There is no need for tax in an enlightened society. We live in wage slave societies. They got you working to pay taxes. Having said that, this is a practical tax knowledge book. I tell you everything I know about how you can play by the rules and save as much as possible on your taxes. First off, let me preface this chapter by saying that all tax laws are tentative, changing like the wind, so although the information I provide here was current at the time, it may not be now, so double check anything you read here. Everybody hates taxes, but it's the law, so you might as well do it and do it right to bypass the alternative, auditing and heavy penalties. Once you learn the system, take some notes and you got it for life. Generally, the IRS requires that you file a tax return by April 15 of each year unless you request an extension in writing. Save and categorize all of your deductions throughout the year so that you will be organized and ready to file when the time comes. You could fill out your own tax returns to save a few bucks, but hiring a professional may save you thousands because they know all the loopholes and deductions. Filing incorrectly can bring trouble regardless of whether it's intentional or via ignorance. The more accurate and on time your return is, the least likely you will be audited. The best way to take the deductions you're entitled to is to learn the system yourself, do your own taxes, and then possibly get them looked over by an expert after. Most preparers don't know what you do and what you're entitled to unless you tell them, and you don't know unless you learn the system, so do it for yourself. The IRS has 5 filing categories. Single. Unmarried, legally separated under a decree of divorce or a separate, maintenance contract, and, after a time, widowed. Married, filing jointly. You and your spouse report your incomes on one tax return. You are both required to sign the return. Married, filing separately. Occasionally used by married couples to reduce the total amount of tax liability. Generally, you and your spouse file separate returns and are each responsible for your own taxes. Head of household. Special status that is taxed at a lower rate. To qualify, generally you must be single, although some married persons who live apart may qualify, and be responsible for more than half the upkeep of a home where a qualifying dependent resides. Qualifying widow with dependent child. Special reclassification where if your spouse died in either of the preceding 2 tax years, and not the tax year of the return, and you have a dependent child and meet certain other requirements, you may qualify. Everyone must file the basic tax form 1040, or 1040EZ or 1040A. You must include additional forms depending on the type and amount of income earned and deductions taken. Consider the lists below. 1040EZ. You may be able to use this form if you are single or married filing jointly, you have no dependents, you and your spouse are under 65 and not blind, your taxable income, which can only be from certain sources, is less than $50,000, your earned interest is less than $400 and you do not itemize deductions. 1040A. You may be able to use this form if your taxable income is less than $50,000 and you do not itemize deductions. 1040. Everyone can use this form to report all types of income. Generally, you must use this form if your taxable income is greater than $50,000. The 1040 is also the form used when you itemize your deductions instead of taking the standard deduction, which is generally the amount the government allows each person to claim instead of itemizing deductions. The amount of the standard deduction changes annually and is listed in the tax form booklets. The following is a list of the schedules most commonly used with the 1040. Schedule A, itemized deductions. Schedule B, report taxable interest or dividends in excess of $400. Schedule C or CEZ, report profit or loss from a business. Schedule D, report capital gains and losses. Schedule E, report supplemental income and losses. Schedule EIC, claim earned income tax credit. Generally, W-2 forms are wage and tax statements you receive from your employer. You should receive a W-2 form from every employer at the beginning of each year for income earned the previous year. If you do not receive a W-2 form by February 1st, contact your employer. It's your responsibility to report all your earnings. Banks, mutual funds, and other investment firms provide 1,099 forms that show dividends and interest earned over the course of the previous year. You might also receive a 1,099 if you did work as an independent contractor. Interest and other income must be added to your total earnings. Again, you are responsible for reporting the earnings listed on all 1,099s. There are several software programs on the market like TurboTax, TaxCut, Personal Tax Edge and Simply Tax. If you earn more than $200,000 a year, the IRS has something called the Alternative Minimum Tax, AMT, which means that you can't take the same dedications as others do, thereby, you end up paying more tax. You can amend an already submitted form by requesting a 1040X form, filling it out and submitting it. If you file a Form 4868, Application for Automatic Extension of Time to File U.S. Individual Tax Return, you're asking for an additional 4 months to file your 1040 tax return and you get it automatically. File before April 15th. It gives you time to file your tax return but doesn't give you more time to pay the money you owe. If you can't meet the new deadline, August 15th, file a Form 2688, but this time you need a legitimate reason for an extension, and if granted, you get 2 more months to file. If you can't pay what you owe, you can file a Form 9465, installment agreement request, and pay your debt in monthly payments. There is an interest fee of 7%. The IRS says that it actively looks for non-filers by searching through all manner of computer records. If you're a non-filer and want to get back into the system, you might just call 800-828-1040 and arrange some kind of compromise. They may waive some of your debt, bottom line they want your money, some is better than none. Get a good tax preparer to do your return and maybe even a lawyer. If you have some kind of problem, contact the IRS and ask for the address of the nearest problem resolution office where they will work with you to solve your problems. Some people say keep tax papers for 3 years, 6 years, forever. In actual fact, the IRS could come after you anytime for any offense no matter when committed, so it's your choice, but the real deal is that they're so messed up with paperwork that if they don't come after you right away, they probably won't ever for that particular return, though sometimes they target people and slam them with cumulative returns from way back. Don't trust them, ever. If you earn a regular paycheck and receive a pretty big tax refund, that's interest-free money the government is using at your expense. Ask to have a lower withholding rate at the Human Resources Office where you work. In addition, take bigger deductions on your W-4 form in order to minimize withholding fees, such as maximizing retirement savings plans. If you have to file state income taxes, check with your local library for more information. Tax checklist. Use the following checklist as you gather information and prepare your taxes. Collect all records including W-2s, 1099s, receipts, etc. Obtain forms and schedules from the public library or the IRS. Fill in your return following the directions in the appropriate booklet. Check your return for accuracy. Sign and date your return. Attach all required forms. Include the payment voucher, Form 1040V, with any required payment. Don't mess too much with deductions for travel, entertainment, home office, and capital gains and losses. If you make a mistake, amend it with a 1040X form. Use last year's form as a general guide to help you through. File on time even if you can't pay. You can file for an extension using Form 4868. Include a check if you owe money. Keep copies of all records and of the return itself. Keep your records for 3 years. Send the form to the correct address. Don't make these common mistakes. An incorrect social security number. Incorrect math. No signature, or if you're filing jointly, only one signature. Failure to include W-2s. Use wrong tax tables to figure taxes owed. An extension just means more time to file taxes, not more time to pay. Incorrect medical and dental deductions, which is based on adjusted gross income. Miscalculating interest deductions on refinanced home mortgages. Errors on taxes owed on unemployment insurance. Not including social security numbers for children over the age of 1 claimed as dependents. Tax tips/tax breaks/tax one-liners. Tax laws always change. Type new tax breaks into a search engine. I, like you, hate the whole issue of taxes, but it's something you should learn to save money. Your best bet is to get the free government booklets and do the research yourself, or shop around until you find a savvy tax preparer who will find the loopholes to give you the best deal around. All these ideas are general suggestions. Federal income tax is complicated. You either need to see an expert or read up on the IRS booklets. The IRS calculates a diff/discriminate information function for each taxpayer. The higher the diff, the more likely you will be audited. Watch out for things like large non-cash charitable contributions, low income but many expenses, hobby losses, excessive deductions, excessive employee business expenses, excessive moving expenses, large casualty losses. If there's something unusual on your return, send a letter with your tax return. Keep your records neat and readily available. Get professional help if the IRS hassles you. A report showed that 29% of all IRS penalties are wrong and should never have been imposed. If you have any problems with the IRS, you should first and foremost go to your own tax expert, not the casual person who just fills out returns, but the expert who took the in-depth course from the IRS itself to become accredited. Get him to audit your return to see if they made the mistake. Use a flexible spending account for medical and dependent care expenses if applicable. Set up trusts to pass on your assets to your children with a minimal amount of estate taxes. Keep a diary of all tax-deductible expenses. Avoid tax penalties. When in doubt, take the deduction. Sign the return yourself rather than have an expert sign it. If you file after April 1st, because of the glut of returns, you will have a less likely chance of being audited, though the IRS denies that this happens. Earn less income to get under the basic minimum before taxes and/or find tax shelters. The IRS is sitting on millions of dollars of unclaimed income tax refunds. If you think you're entitled, send them a letter. It's a good idea to put money away for your children. You can claim $600 investment income for each child under 14, with the next $600 taxed at the child's rate of 15% and anything beyond that taxed at your rate. So instead of putting your money in an account for you, transfer some to your children. This can later come back to haunt the child when applying for a student loan because they may have too much money to qualify. Take advantage of the stimulus tax breaks created to help stimulate the economy. Boost your 401(k) contributions. Any money you contribute to a 401(k) lowers your taxable income. If you are not eligible for a pension, contribute to a deductible individual retirement account. If you are self-employed, fund a KIA account. If you sell your principal residence in which you have lived for at least 2 of the past 5 years, you will not have to pay capital gains tax as long as your profit is less than $500,000 for a married couple filing jointly or $250,000 for a single. Make the most of your flexible spending account. Contributions to a flexible spending account avoid income tax and social security tax. Buy a house. There is a tax credit for purchasing a first home. Sell losing investments. Capital losses are first used to offset capital gains, and then up to $3,000 of the net loss can be deducted against income. Use the dependent care tax credit. Even summer day camp counts if your child is younger than 13 and you or your spouse work. Give to a charity. You can write off charitable contributions if you itemize your deductions. Some college fees can be deducted. Big medical expenses get a break if they exceed 7.5% of your adjusted gross income. Buy tax-sheltered investments such as municipal bonds and municipal bond funds, annuities, and life insurance. State income taxes and property taxes are deductible. Write off business equipment. Buy tax-exempt municipal bonds and treasury securities. When you donate something like a house, car, artwork, etc. to charity, you're allowed to deduct the fair market value on your taxes. If you engage at least 50% of your time, over 750 hours in your own real estate rental properties, you're allowed to deduct any losses from missed rental payments/vacancies. Capital gains are taxed at the rate of 28%, which is lower than tax rates. Buy a home and use the mortgage for interest deductions. The tax law taxes 85% of Social Security benefits above $34,000 for an individual and $44,000 for couples. Individuals with incomes between $25,001 and $34,000 and couples with income between $32,001 and $44,000 have up to 50% of their Social Security benefits taxed. The tax law states that if you as a senior give away most of your assets, you can't be eligible for Medicaid nursing home care until you wait for 3 years, 5 years if you put your assets into trust. You're limited by what you can deduct while traveling on an ocean liner or cruise ship to double what an executive employee earns per day, $126, hence, $252, but you could deduct up to $2,000 if the following requirements are met. A. The meeting must be actively related to business. B. The cruise ship must be registered in the U.S. and travel only to ports in the U.S. C. You must include a written statement with your tax return stating how many hours a day were spent in business matters, and the statement must be signed by your cruise sponsor verifying that you participated in the meetings. Meal and entertainment expense deductions are now only 50% as opposed to the previous 80%, and they have to be directly related to your work/business. Keep detailed records to avoid trouble in case of audit. Just keep a small diary and note the reason for a business lunch, travel, gift, etc. Business gift deductions are $25 maximum. Keep detailed records of business car expenses so that you can take a greater deduction rather than the standard mileage rate. If you pay medical and dental bills for a former spouse, you can count that as deductible alimony. If you get insurance payments for whatever reason, the way they're disbursed to you may affect your tax bracket. Think it through. The same works for pension and retirement plans, i.e. lump sum versus monthly annuity. Maximize your contributions to payroll savings, IRA, SEPs, and 401(k) plans because they're deductible. If you already own a home and have built up equity, convert your non-deductible consumer loans to deductible home equity loans. Gambling winnings are taxable. To soften the blow, enter contests with a spouse or friend, then when you win, each person pays on the share of their winnings. Learn the child care credit if you have children and use it. You can claim one exemption of a value around $2,500 for every person in your household. Whenever you get a job or the tax situation changes, you're required to fill out a W-4 form, Employees Withholding Allowance Certificate, which determines how much will be withheld from your paycheck for income tax purposes. You determine this value, not your employer. On this form there's a question asking you how many allowances you're taking, a number from 1 to 15. An allowance roughly corresponds to every major deduction you intend to make in your taxes that has a value of about $2,000. Your dependents each equal one allowance, but allowances are not limited to this. They encompass all manner of deduction. By increasing the number of allowances on your W-4 form, you get more back on your paycheck because less is withheld for income taxes. If you claim 9 or more allowances, the IRS will send you a letter asking you to explain what the allowances are, but if you list the number 8, they won't hassle you. By the end of the year, the government must have 90% of all the income tax you owe in your withholding account, otherwise you will charged a penalty for whatever money isn't there, so do your calculations correctly on the W-4. A tax refund is nothing more than getting back the money you paid into the IRS and they have used it interest-free at your expense. For every refund block of $600 you get, raise your allowances on the W-4 form by 1 to ensure the IRS won't withhold as much from you. Request IRS Circular E for more information. You're taxed on 50% of Social Security income. Municipal bonds are exempt from federal tax. You and your wife each can give up to $10,000 per person per year as gifts without being taxed. The recipient doesn't have to pay any income tax on the gift either. You might be able to save money by checking out which is better, a separate versus joint filing. The best excuses for late filing are that you didn't get all the proper forms, you relied on erroneous information given by an IRS officer on the phone, serious illness in the family, and records were lost or destroyed in something like a fire. If a tax return is lost in the mail, the only proof of filing that the IRS will accept is a receipt from certified or registered mail. Currently, the marginal tax rate is 39.6% for individuals making $250,000, 36% for couples earning $140,000 and for individuals making $115,000. It's about 28% for most of the other categories. If the IRS unjustifiably gives you a hard time, call your congressman and your senator. Long-term capital losses can be used to offset up to $3,000 of ordinary working income. If you make a loan to a family member, document it with paper and document the repayment. Personal loans are non-deductible, home equity loans are, so get them instead of a personal loan. Home tax tips. If you are the principal resident of your home for at least 2 of the last 5 years, 730 days, you can take a tax-free gain on the sale of it of up to $250,000 for a single filer and $500,000 for married, filing jointly. Short temporary absences such as going on vacations or leaving for the season are counted as periods of use even if the property is rented out during those periods of absence. Any absence over 1 year is classified as an absence, not habitation. Some people don't work a regular job. They buy a property, fix it up, live in it for the 2 years, sell it, take the tax-free gain, then buy another place, fix it up, live in it for 1 month, rent it out for 11 months, live in it for 1 month, rent it out for another 11 months to satisfy the 2-year rule, then sell it, take the tax-free gain, and keep repeating the process. If you haven't lived in your property for 2 years but are forced to sell because of a change in place of employment, health reasons, or unforeseen circumstances as defined by the IRS, you are entitled to a reduced exclusion amount, which is gains that you don't pay taxes on. The formula for reduced exclusion is that you get a percentage of the time lived in the house relative to 2 years and multiply this by the exclusion rate, $250,000 for a single, $500,000 for a married couple filing jointly, and you get your reduced exclusion quantity. Unforeseen circumstances is defined by the IRS as involuntary conversion of the home. For example, the government takes your property in order to build a school. Natural or man-made disasters. Acts of war. Death in the family. Lost your job. Change in self-employment, started a business or your business went bust. Divorce, legal separation. Multiple births resulting from the same pregnancy. If you buy a home that has rental units, create 1 or 2 or simply rent a few rooms out of your single-family dwelling, according to the IRS, you are running a business called a rental property that is reported on Schedule E of the tax form, if you choose to play the book and report it. Because of this, you can now deduct home-related expenses on your rental portion of the home and apply it as deductions against your rental income. You can also deduct depreciation on the space. When you sell your home, you can exclude the gain on the percentage of the house you lived in but not the rental property part. Some deductions are: home office deduction for the part of the home used for work/business. Improvements to your home for medical reasons. Home mortgage interest, real estate taxes and casualty losses are deductible. Mortgage interest on a second residence is deductible. Rental income if you rent your home less than 15 days a year. Charitable contributions if you itemize. Credit for child care expenses. Alimony payments. Property settlements with your ex-spouse. Alimony payments. Money recovered in personal injury/defamation of character lawsuits. Workers' compensation payments. Disability payments. Gambling losses up to the amount of gambling winnings. Federal and state income tax refunds. Equitable property trades. Fringe benefits from your employer. Company pension plan benefits. Gifts and inheritances are tax-free to the recipient. Life insurance benefits. Scholarships. Some of the health insurance for the self-employed. Traveling as a host or chaperone for a charitable group. Traveling for medical reasons. Parents as dependents if they live with you and earn less than $2,000 per year. Bad debts and worthless securities. Mortgage prepayment penalties. Real estate taxes. Personal property taxes. Taxes to all local, state and foreign governments. Even if a dependent doesn't live with you like a parent, you could deduct for payments to her. Check Form 2120. If you lose things due to theft or the weather and you have no insurance, you can deduct it as long as you have proof like a police report. 4 kinds of interest you pay that you can deduct are home mortgage interest, points on a mortgage, interest on business loans and investment interest. Child support payments are not deductible but alimony is. Hire your children and deduct it as salary paid out. The child's salary is taxed at the child's rate. You can deduct medical expenses that exceed 7.5% of your adjusted gross income. The IRS has a list of what's allowed to be deducted including health insurance, prescription drugs, and dental work. The cost of renting a safety deposit box is deductible as an investment expense. There are many obscure tax credits that might be worth checking like for the use of diesel-fueled vehicles and the alternative fuels credit. Some legal bills are deductible. Pay your wife and children a salary. Chapter 2. Taxes 2. Tax mistakes checklist. Did you use the peel-off label and enter any corrections? If you do not have a label, or there are too many corrections, did you clearly print your name, social security number, and address, including zip code directly on your return? Did you enter the names and social security numbers for yourself, your spouse, your dependents, and qualifying children for earned income credit, exactly as they appear on the social security cards? If there have been any name changes, be sure to contact the Social Security Administration at 1-800-772-1213. Did you check only one filing status? Did you check the appropriate exemption boxes and enter the names and social security numbers exactly as they appear on the Social Security card, for all of the dependents claimed? Is the total number of exemptions entered? Did you enter income, deductions, and credits on the correct lines and are the totals correct? If you show a negative amount on your return, did you put brackets around it? If you are taking the standard deduction and checked any box indicating either you or your spouse was age 65 or older or blind, did you find the correct amount to enter on line 21 of Form 10408 or line 36 of Form 1040? Did you figure the tax correctly? If you used the tax tables, did you use the correct column for your filing status? Did you indicate the amount of your overpayment you want applied to your L999 estimated tax? If you do not enter an amount, the full overpayment will be refunded to you. Did you sign and date the return? If it is a joint return, did your spouse also sign and date the return? Do you have a Form W-2 from all of your employers and did you attach copy B of each to your return? File only one return, even if you have more than one job. Did you attach all other necessary schedules and forms and sequence number order given? If you owe tax, did you enclose a check or money order with the return and write your social security number, tax form, and tax year on T? Did you make a copy of the signed return and all schedules for your records? Other common errors include computation errors in figuring the child and dependent care credit or the earned income credit. Also, missing or incorrect identification numbers. Withholding and estimated tax payments. Math errors, both addition and subtraction. Source: Internal Revenue Service. For more help in preparing your taxes, visit the irs.treasury.gov, IRS Digital Daily. What can't be taxed? This is just a general guideline because the laws change all the time. Unlimited gifts. Life insurance dividends. Child support to the recipient. Inheritances, not by IRS although some states tax it. Scholarships and academic assistance. Profits on sale of a home if another home is bought within 2 years. Social Security unless your income goes over certain benefits. Health, accident, and worker compensation benefits. Court judgments unless they replace lost income. Municipal bonds. Roth IRAs. Tax breaks for children and dependents. There are tax breaks for parents. Get the IRS booklets. Child tax credit. Publication 503, Child and Dependent Care Expenses. The Earned Income Tax Credit is for low-income parents, irs.gov. If you get childcare as with daycare, fill out IRS Form W-10, Dependent Care Provider's Identification and Certification to get the child care tax break. Your employer can set up a dependent care account which you contribute some of your earned income into to help pay for child care tax-free. Earned income credit for low-income people. If you fit within certain low to medium income levels, there is a tax break on federal IRS taxes known as the Earned Income Credit. It works by lowering your federal income taxes such that you might qualify for a refund. The Earned Income Credit has an advance payment option where you could add a biweekly amount to your take-home pay rather than have it taken out in taxes. You will need to submit a Form W-5 to the IRS. If you're low income, you can use the Volunteer Income Tax Assistance Program, VITA, set up by the IRS. In addition to the Federal Earned Income Program, some states have a similar program through their income tax system. These states are Illinois, Indiana, Iowa, Kansas, Maine, Maryland, Massachusetts, Minnesota, New Jersey, New York, Oklahoma, Oregon, Rhode Island, Vermont, Wisconsin. Contact your state revenue service and ask them if they have an earned income credit program for low-income workers. cbpp.org, Center on Budget and Policy Priorities. TaxCreditResources.org. Internal Revenue Service. 800-829-1040. irs.gov. Get IRS Publication Number 596. Real Estate Taxes. The tax advantages of owning a home are that you can deduct up to $1 million of mortgage interest payments, $100,000 interest on equity loans, closing points on the purchase which is really prepaid interest, and if you have real estate business holdings, you can deduct the losses. Mortgage interest and property taxes are tax deductible on IRS Form 1040. There's a one-time lifetime exclusion from capital gains taxes where, if you're 55 or older and have physically lived at least 5 years in a house, you can deduct $125,000 from the money you earn from the sale of the house from capital gains taxes. You can do this with your wife too, but the house has to be in your name. You can deduct money from your income tax from rental units by making improvements on it. Keep all receipts. For income tax purposes, you can deduct from your gross rental income all the expenses associated with running a rental business, including mortgage interest, property taxes, insurance, maintenance, management fees, advertising, and depreciation of the property. Residential real estate is depreciated over 27.5 years on each year's tax return. You claim a business expense equal to the value of the building but not the land divided by 27.5. When you sell the property, you will have to pay taxes on all the depreciation deductions you claimed over the years. FLIP stands for Family Limited Partnership, which is a complicated procedure where you can give appreciated real estate to your kids without being subjected to the gift tax as long as its value is less than $600,000 or whatever the current limit is. Ask a tax man about it. You can buy your parents' home and rent it back to them to get some tax breaks, particularly when it comes to estate planning. You can sell your house to your children and rent it back from them, giving you all some tax relief. You can take deductions for the interest on your mortgage or home equity loan up to $100,000. If you own a vacation home, boat, or RV that has sleeping and bathroom facilities, you can treat it as your second home and take the interest on the loan as a deduction up to $100,000. irs.gov/prod/forms_pub/index, get IRS publication 527 for mixed use of rental property, publication 927 for depreciation costs of rental property. Taxes on the sale of a home. You pay tax as you receive payment for your house, so instead of taking a lump sum, if you take payment in installments, you might end up saving a lot in taxes, but the disadvantage is the headache and the fact that you don't just take the lump sum and invest it yourself. You don't pay tax on the gains in selling a house if in the period of 2 years before or after the sale, you buy and live in another house of equal or greater value. If you are involved in real estate, ask a tax preparer or go to the library and get a copy of the Revenue Reconciliation Act of 1993. If you rent a property out for less than 15 days a year, it's not considered taxable income. If you're trying to rent your property out but it stays vacant, you're allowed to deduct expenses on it during that period of time. Learn about capital gains taxes. You get a $250,000, $500,000 jointly exclusion when you sell your home, provided you have lived in it as your principal residence for at least the last 2 out of 5 years. When you sell your home, regardless of whether you make a profit or lose money, you have to declare it on your federal income tax return with a special form called Form 2119, Sale of Your Home. The formula they use is selling price, price you paid for the house plus major improvements you made on it plus payments/losses due to major disasters like floods, equals profit or loss. Keep receipts on improvements. You can deduct what you paid on improving the house from the capital gains tax you have to pay if you sell at a profit over the original price you bought it for. For example, if you bought the house for $50,000 and sell it for $60,000 but added a $4,000 new kitchen to it, you only have to pay $6,000 in gains taxes. Hire your children to do the improvements. Note that improvements are distinguishable from necessary repairs, but if you upgrade something while making a repair, that's considered an improvement. You can make what are usually non-deductible repairs within 90 days before you sell and take the deduction on Form 2119, line 11. You're supposed to pay federal income tax on the profit, but if you buy another house of equal or greater value within 2 years and use it as your primary residence, you don't have to pay the income tax on the capital gains from the sale of your house. If you sell your house after the age of 55, you're entitled to keep up to $125,000 of the profits one time in your life without paying income tax. irs.gov. 800-829-3676. Free booklet, number 523, Selling Your Home. Chapter 3. Taxes 3. The Taxpayer Bill of Rights. Due to many complaints by taxpayers, Congress has enacted a Taxpayer Bill of Rights. For full details, call the IRS and ask for a copy or go to the library. Some basic details are: the IRS must prepare a non-technical statement spelling out the rights of a taxpayer and appeal procedures during an audit, before an audit interview or any notice of deficiency or collection action, Section 6227, Code Section 7520. For deficiency notices and other demands of collection payment, the IRS must specifically identify the amount and basis for any tax, penalty, or interest charge specified in its notice, Code Section 7521. You can have a representative represent you during an examination unless the IRS specifically issues an administrative summons requiring that you appear in person. If you wish to consult with a representative during an examination, the IRS must cease the procedure and give you that right. Code Section 7520. You and the IRS both are allowed to audio record an examination if either of you give prior notice. Code Section 7520. You can ask your IRS ombudsman for hardship relief from seizing your property and important assets and they must stop. Code Section 7811. You cannot be penalized for erroneous IRS advice. Code Section 6404. Refer to Code Sections 6331 and 6334 for details about seizure, property exemptions, property returns, and wage garnishments. If the IRS disregards the law in its pursuit of you, you can sue them in federal court for a maximum amount of $100,000, but first you must go through and exhaust the administrative chain of command within 2 years of the IRS improper conduct. If the court decides that your lawsuit is frivolous, you could be fined up to $10,000, Code Sections 7433 and 6673. Tax amnesty/settling with the IRS. A lot of people try to fight the IRS both in an audit and after if they have to go tax court, but one solution is to offer to make a deal like they do in criminal court. Tax evasion is criminal too, but if you know you're guilty and catch them with an offer before they do all that work to build a case against you, you might save yourself a lot of headaches. You can usually negotiate a settlement. The IRS is not allowed to make the first offer for settlement. It's up to you to start the ball rolling with an offer. Simply start with a low offer saying you'll give them about 20% of what you owe quickly in a lump sum and work up from there to about 50%. These guys take what seem like ridiculously low settlements. It seems as though they would rather have cash in the hand than court judgments and IOUs. I'm not an expert, so talk to a good tax lawyer about it or seek out information on the web by trying the following terms in search engines. Tax amnesty. Settling with the IRS. Tax settlement. You don't necessarily need a lawyer, but you should talk to one beforehand for advice. The IRS wants to get rid of cases, so they will be willing to work with you. According to the book How to Get Tax Amnesty, A Guide to the Forgiveness of IRS Debt, including penalties and interest, Daniel J. Pilla says that under several tax amnesty programs, the IRS must accept the taxpayer's offer of compromise as payment in full. Simply make them an offer and see what happens. They would rather you pay them something and stay in the system rather than saying screw them and going underground, so to speak, washing your hands of paying income taxes forever or until you're caught, and very few people are caught if they don't file. It's only the ones who file who get zinged for defective tax returns. There's another book called How to Settle with the IRS for Pennies on the Dollar by Arnold S. Goldstein. I saw these books at loompanics.com under tax evasion. IRS Whistleblower Reward Service. If you know someone you don't like who's systematically and substantially evading taxes, you can claim a reward by turning them in. Section 7623 of the IRS Code authorizes a reward for turning anyone in who violates federal tax law. You have to fill in Form 211 and use your real name to claim it. Mail the completed form to Informant's Claim Examiner at the nearest IRS office to where you live. The IRS says they will keep your name confidential such that the person you turned in will never find out it was you who did it. Rewards are based on the value of the information given and the amount recovered. There are 3 different scales, generally 1, 5 and 10% of the first $75,000 recovered plus lower percentages for more, up to $100,000. Refer to Section 7623 of the IRS Code and fill out Form 211. Criminal Investigative Division. IRS. Washington, D.C. 20224. 202-622-3200. IRS.gov. IRS Internal Security. 202-622-4610. Watches over unscrupulous employees. Tax Court Info. The U.S. tax court will hear your case if you dispute taxes owed valued at under $50,000, called an small case. You have to pay a $60 filing fee. The tax judge will come to your area to hear the case. Procedures are more informal than with bigger cases. If an audit finds that taxes are due, you will receive a 30-day letter giving you 30 days to appeal the decision. If the appeals division also finds that taxes are due, or if you don't bother appealing, you will receive a tax deficiency notice giving you 90 days to file a case in tax court. At that point, contact the tax court for the forms needed to file. The tax court generally hears cases before any tax is assessed or paid. The U.S. Claims Court and the U.S. District Court generally hear tax cases only after you have paid the tax and filed a claim for refund. The following steps outline the tax court procedure. The taxpayer petitions the court within 90 days of receiving the deficiency notice. Receives IRS response within 60 days. Answers IRS response within 45 days. Awaits scheduling of the hearing. Appears at the hearing where a tax judge hears the case and renders a written opinion. You can appeal a high tax bill by writing the tax court listed above or using the IRS Problem Resolution Program. Get the booklets. 1. Your rights as a taxpayer. 594. Understanding the collection process. 1546. How to use the Problem Resolution Program of the IRS. The courts are slowly starting to realize that some IRS agents are bullies. If you beat the IRS in a tax court, you can recover legal costs and administrative costs if you can prove that the action against you was unreasonable. Code Section 7430. LawyersandSettlements.com. USDA.gov/USDC.inq/ASP/search-party-options.asp, Blackstone Docket Inquiry, Cases before the U.S. Tax Court. itsdoc.com. 800-874-4337. Tax Court Document Retrieval Service. Tax Court. 400 2nd St. Northwest. Washington, D.C. 20217. 202-606-8754. USDAexcourt.gov. Contact them to fight your tax bill. Tax shelters. Tax shelters are anything you might use to legally avoid paying taxes. The laws are always changing, so the only way to keep current is to do your own research. The people who make IRS laws, in keeping with the philosophy of business in this country, offer tax benefits sometimes called tax shelters for those people willing to put their money on the line in certain risky investments. If you're a somewhat high roller, you might be interested in checking some of these out with a tax expert. Your biggest deductions as potential tax shelters are up to $25,000 on rental real estate expenses and losses to any small business you have, no matter how Mickey Mouse it seems, as long as you have the paperwork to prove that you are in business and contributions to your retirement savings plan. The most traditional tax shelters are retirement savings plans like the RRSP in Canada and 401(k) IRAs and KIAs in the US, company pension plans and life insurance. Real estate has been touted as a way to put a lot of money into a solid investment without paying taxes on it. A common tax shelter has been the business owner or investor who started another business which would tie up his money and create losses on paper like depreciation, which he could claim as losses to offset his capital gains in his other investments. Tax shelters can keep your money out of the hands of the IRS, but some of them can cost you dearly as well. Generally, all real estate purchases have definite tax advantages. In even the simplest kind of transaction, such as buying a better home for your family, you will be able to deduct from your gross income the amount you pay in mortgage interest and property taxes. If you rent out your old house or buy a house as a rental property, you will be allowed to deduct all your expenses from the rent you receive. You can also deduct the depreciation on the house based on the cost or on the market value at the time the house was converted to a rental property, whichever is lower. You also have the option to compute your depreciation over 15 years, which would probably give you a tax loss even though the property is producing a cash income for you. Remember though, you cannot claim a depreciation on the value of the land, only for the cost of the house. Until 1981, you could not deduct losses on a property rented to relatives. However, that rule has been repealed and now makes family tax savings available in certain situations when you rent to relatives. Be sure to check with your local IRS office for complete details. So-called Clifford trusts are tax shelters that shift the gross income of a company or family breadwinner to other family members in lower tax brackets. An income-producing property is transferred to a trust which must be set up to last 10 years and a day. The beneficiary receives the income during this period and then the property reverts back to the grantor. This type of trust is often used to accumulate money for children, who can use it for higher education or for a start in a career or business of their own. You should bear in mind when setting up such a trust, however, that parents have a legal duty to support their minor children and thus, a trust cannot be set up to be used for that purpose. Equipment leasing programs are another common income sheltering method. Most of these programs can be combined with a trust. Here's how they work. The owner of a business sets up a trust for a family member. Business property or equipment is transferred to the trust and then leased back to the business. The trust gets the income and the business gets a deduction for the rental fees it pays. From another angle, the trust could buy equipment for lease to the business and get deductions for interest and other expenses involved. Investment tax credit can also sometimes be claimed in non-net lease situations. Making interest-free loans is another method of sheltering one's income. Say you lend several $1,000s to a son or daughter who invests the money. The borrower gets the income and you eventually get your money back. If you're in the 50% tax bracket and the borrower is in the 25% bracket, your tax savings can be considerable. Investing in municipal bonds are very definitely a means of sheltering your income. Income from these bonds is tax-free, but it's generally lower than from other types of investments. Municipal bonds pay at a fixed rate of interest. Relative to other kinds of investments you could make, you will lose on municipals if interest rates go up and win only if the interest rates on other investments go down. By now, everyone knows about IRAs and KIA plans for the self-employed. You put money into a personal retirement trust and pay no taxes on it until you actually withdraw from it. Some companies give their employees a chance to set up their own retirement accounts, thereby deferring part of their gross incomes until after they retire. However, deferring income until after one retires is no longer as attractive as it used to be, particularly if your tax rate is not expected to change after retirement. If you don't anticipate a lower tax bracket after you retire, it's generally better to take all your income now and invest it in high-yield growth funds that will mean more money for you in your retirement years. There are innumerable ways and methods to shelter your gross income from the tax collectors, all of them legal. The important thing is to check them out with your tax preparer and decide which would be best for you. The IRS focuses on people who invest in the following so-called tax shelters: motion pictures, real estate, farm operations, and equipment leasing. Very little exists on the library shelves nor anywhere else in the conventional literature about tax shelters. Check out number 336.24 and number 343.05 to see what's there. Magazines give brief, cursory articles about generic deductions that most of us are familiar with, but it's very difficult to find books that examine the potential of creative deductions and shelters in depth. A professional accounting firm has written a book about tax shelters called Tax Shelters, the guide which they have updated several times over the years. If you're a high roller, it might be worthwhile to buy it. Arthur Anderson & Co. 60 West Washington St. Chicago, Illinois 60602. ArthurAnderson.com. Some of the things they talk about are limited partnerships, trusts to remove assets from the estate, sale of business property to a relative, then rent it back and take a business deduction on the rent, real estate investment write-offs for both gains, improving the property, and losses, deduct the losses, depreciation. Oil and gas exploration, because of the high risk, it is virtually all deductible. Equipment leasing for your business. Farming. Tax incentives for timber harvesters to replenish the forest. Investing in movies. Research and development of new products. Return on investment in general. The book is reasonably complicated and should be read only by sophisticated investors who know what's going on in the world of money. Chapter 4. Taxes 4. A raise vs. Fringe benefits. If you are on the border between two tax brackets, sometimes a raise at work will put you in a higher tax bracket such that ultimately, you will earn less at the end of the year because you will be paying more out in income tax. A possible feasible solution is to ask for fringe benefits in lieu of a raise. Trade unions like to negotiate for fringe benefits because they're not taxable. Some common fringe benefits are as follows: medical insurance, life insurance, company car, expense account, a dollar value of company products for free or at a reduced price, daycare for children, fitness facility membership. Investment taxes. Capital gains taxes are taxes that you have to pay on the profit from any investment when you sell it, like stocks, bonds, funds to life insurance policies to houses. Look for a book about it at number 332 at the library, check out the websites or talk to a tax expert who knows some capital gains loopholes. Get Tax Form 6252. Go to the Schedule D part of the 1040 tax form. There are both federal and state laws on some or all income from investment securities. Taxes can eat into a profit/capital gain and turn it into an after-tax loss. There is tax on interest, dividends, capital gains, interest. Most interest on municipal bonds, munis, is exempt from federal taxes. The interest on corporate bonds is taxed both federally and statewise. Interest on United States government bonds is taxed federally, not statewise. The tax rates on interest payments is about the same as the taxes on your salary. Dividends. Dividends, payments to stock owners based on the quarterly profit of the company, are taxable on a federal and state level. Some companies offer the stockholder either a straight cash dividend or more stock. Either way, it is a dividend, therefore taxable, except when the company offers more shares only as a dividend and not the option of either shares or money, in which case these additional shares are not taxable. DRIPs, reinvested dividends, are taxable at the time they are reinvested. Capital gains. The difference in what you pay for an investment and what you sell it for is either the capital gain or the capital loss. When a stock is owned for more than 1 year, the gain or loss is classified as long-term. When a stock is owned for 1 year or less, the gain or loss is classified short-term. The current capital gains tax rate is about 20%. At the end of the year, an investor should tally up the capital gains and losses on each of his or her investments to come up with either a net capital gain or net capital loss. A net capital gain is taxable. A net capital loss is deductible for tax purposes, but there is a maximum limit to how much an investor can deduct for tax losses per year against ordinary income. That limit is currently $3,000, but if filing as married, filing separately, the deduction is $1,500. If the net capital loss is more than the limit for one particular year, you can deduct the rest of the loss, the balance, in the subsequent tax year. This is called a tax loss carry forward. From here, capital gains gets even more complicated with the concept of multiple positions, which means that if an investor owns several lots of stock, bought at different times and prices, multiple positions, and he or she sells one of those lots, unless the investor otherwise specifies, the stock purchased first, the oldest, is considered to be the one sold. This is the FIFO method, first in/first out. It's too complicated for me, but it just goes to show how complex the IRS is when it comes to taxing your money. Long-term capital gains only qualify as investment income if the investor volunteers to have them taxed at the same rate as personal income. The top tax rate is 39.6%, while the rate for capital gains is 28%. Take your gains early in the year rather than later. Sell your good stocks then to pay less capital gains taxes. Claim your investment losses as deductions. If you sell an investment but agree to be paid off in installments over several years, you won't be taxed until you get the money. Capital Gains Newsletter. epub 4573. Rock Hill, South Carolina 29732-6573. Free sample copy. Charitable contributions. If you want to help charities out, don't give them money directly. Donate some of your appreciated securities to them that you've held for at least a year, which enables you take a tax deduction, plus you don't have to pay capital gains taxes on it, which you would have had you cashed the securities and then donated the money. To qualify for a tax deduction, charitable contributions generally must be made to U.S., state, or local governments exclusively for public purposes or to certain qualifying non-profitable charitable organizations. Not all non-profit organizations qualify. The IRS determines whether donations to a particular organization are deductible. Generally, eligible organizations operate for one or more of the following purposes: charitable, educational, religious, scientific, literary, against cruelty to animals, to foster amateur sports. It's up to your discretion to determine whether an organization is worthy of assistance. Don't fall for the phony junk mail charities. If you want to check a particular charity out, contact either of the following two organizations. Philanthropic Advisory Service, 4200 Wilson Boulevard, Arlington, Virginia 22203, 70-3-2767-0100, bbb.org.bbb/ National Charities Information Bureau, 19 Union Square West, NYC 10003, 212-929-6300. Give.org. Keep receipts of all checks to charitable organizations and ask for a letter acknowledging your contribution. You can donate property and deduct fair market value from your federal income taxes. You can also leave donations through your estate which can't be taxed by the federal death tax. Whether you're a Christian or not, once you reach a certain level of maturity, you should realize the futility of material possessions and simply give some wealth away to a worthy cause for the karmic value of it all. Ashes to ashes, dust to dust. You can't take it with you, why not give some away to help some kindred poor folk spirits? You will have done the right thing in the so-called karma of the universe. Gifts of stock to minors. When you give stocks as a gift to a minor, do not register the stock directly in the name of a minor. Register them in a custodian account, for guardianship purposes, then re-register them in the child's name when he or she reaches the legal age of adulthood in your state. The custodian account form has information about the custodian, but the social security number for the account is the minor's number, not the custodian's number. Senior taxes. The IRS has a tax counseling for the elderly, TCE, program and a general one for everybody called Voluntary Income Tax Assistance, VITA. Look in your local phone book or call 800 Tax 1040 for information on AARP Tax Aid. 888-227-7669. aarp.org/tax-ide. Internal Revenue Service. 1111 Constitution Avenue, NW, Washington, D.C. 20224. 202-566-5000. 800-829-3676. 800 Tax Form. Request Booklet Number 554 Older Americans Tax Guide. Internal Revenue Service Tax Counseling for the Elderly/Low Income. 800-829-1040. irs.gov. Special Committee on Aging. U.S. Senate. Washington, D.C. 20410. 202-224-5364. Senate.gov. Free booklet, Protecting Older Americans Against Overpayment of Taxes and many other publications. Tax returns as public documents. A lot of government agencies have a legal right to access an individual's tax returns for whatever reason they deem fit. An individual can only access another individual's tax return if he gets that individual's consent and fills out Form 4506. Go to forms at irs.gov. Anybody who is involved in a civil court case or has a civil liability resulting from a civil case judgment can have their tax returns legally accessed with a subpoena. If anybody has a tax lien on them, their tax information becomes public record. Any corporation that considers itself non-profit in the eyes of the law to have tax-exempt status, agrees implicitly to allow its tax returns be public record. Use IRS Form 4506A. If you're married and your spouse files a joint tax return, then you separate and he doesn't want anything to do with you, you're entitled to a copy of the joint tax return even though you didn't fill it out. Any person who owns at least 1% of any corporation is entitled to that corporation's tax return. The executor of a will/estate has a right to the decedent's tax return. The confidentiality and disclosure of returns and return information is at 26 U.S.C. 6103, et. Sec. Look it up at law.cornell.edu/uscode. Taxes quotes. The more you earn, the less you keep. And now I lay me down to sleep. I pray the Lord my soul to take. If the tax collector hasn't got it before I wake. Ogden Nash. A person doesn't know how much he has to be thankful for until he has to pay taxes on it. A fine is a tax for doing something wrong. A tax is a fine for doing something right. Count the day one when, turning on its axis. This earth imposes no additional taxes. Franklin P. Adams. All the Congress, all the accountants and tax lawyers, all the judges and a convention of wizards all cannot tell for sure what the income tax law says. Walter B. Wriston. America is a land of taxation that was founded to avoid taxation. Lawrence J. Peter. Another difference between death and taxes is that you don't have to work like fury to pay for the dying you did last year. Robert Quillen. Oh, by the way. Gazette-Telegraph, Colorado, 1921 April 15. Another difference between death and taxes is that death doesn't get worse every time the legislature meets. Robert Quillen, Paragraphs, Lincoln Star, Nebraska, 1931 April 6. Any tax is a discouragement and therefore a regulation so far as it goes. Oliver Wendell Holmes, Jr. Question: I understand that Congress is considering a so-called flat tax system. How would this work? Answer: if Congress were to pass a flat tax, you'd simply pay a fixed percentage of your income and you wouldn't have to fill out any complicated forms, and there would be no loopholes for politically connected groups, and normal people would actually understand the tax laws, and giant talking broccoli stalks would come around and mow your lawn for free, because Congress is not going to pass a flat tax, you pathetic fool. Dave Barry. Be thankful we're not getting all the government we're paying for. Will Rogers. Be wary of strong drink. It can make you shoot at tax collectors. And Miss. Robert Heinlein. Capital punishment, the income tax. Jeff Hayes. Collecting more taxes than is absolutely necessary is legalized robbery. Calvin Coolidge. Dear IRS, I am writing to you to cancel my subscription. Please remove my name from your mailing list. Charles M. Schultz, Snoopy. Death and taxes may be inevitable, but they shouldn't be related. J.C. Watts, Jr. Did you ever notice that when you put the words the and IRS together, it spells theirs? Friends and neighbors complain that taxes are indeed very heavy, and if those laid on by the government were the only ones we had to pay, we might the more easily discharge them, but we have many others and much more grievous to some of us. We are taxed twice as much by our idleness, 3 times as much by our pride, and 4 times as much by our folly. Benjamin Franklin. I shall never use profanity except in discussing house rent and taxes. Mark Twain. I am thankful for the taxes I pay because it means that I'm employed. Nancy J. Carmody. I don't know if I can live on my income or not. The government won't let me try it. Bob Thaves, Frank, and Ernest. I like to pay taxes. With them I buy civilization. Oliver Wendell Holmes, Jr., quoted by Felix Frankfurter, The Atlantic Monthly, October 1938. I'm proud to pay taxes in the United States, the only thing is, I could be just as proud for half the money. Arthur Godfrey. If we don't do something to simplify the tax system, we're going to end up with a national police force of internal revenue agents. Leon Panetta. If the Lord loveth a cheerful giver, how he must hate the taxpayer. John Andrew Holmes. If, from the more wretched parts of the old world, we look at those which are in an advanced stage of improvement, we still find the greedy hand of government thrusting itself into every corner and crevice of industry and grasping the spoil of the multitude. Invention is continually exercised, to furnish new pretenses for revenues and taxation. It watches prosperity as its prey and permits none to escape without tribute. Thomas Paine. If you make any money, the government shoves you in the creek once a year with it in your pockets, and all that don't get wet you can keep. Will Rogers. Income tax returns are the most imaginative fiction being written today. Herman Wouk. Indoors or out, no one relaxes in March, that month of wind and taxes. The wind will presently disappear, the taxes last us all the year. Ogden Nash. Intoxication, euphoria at getting a refund from the IRS, which lasts until you realize it was your money to start with. Author unknown, from a Washington Post word contest. It was as true as taxes is. And nothing's truer than them. Charles Dickens. It's about 10 times the size of the Bible and unlike the Bible, contains no good news. Don Nichols, about the Internal Revenue Code. It's income tax time again, Americans, time to gather up those receipts, get out those tax forms, sharpen up that pencil and stab yourself in the aorta. Dave Barry. Man is not like other animals in the ways that are really significant. Animals have instincts, we have taxes. Irving Goffman. Next to being shot at and missed, nothing is really quite as satisfying as an income tax refund. F.J. Raymond. Of all debts, men are least willing to pay their taxes. What a satire this is on government. Ralph Waldo Emerson. Of course, the truth is that the congresspersons are too busy raising campaign money to read the laws they pass. The laws are written by staff tax nerds who can put pretty much any wording they want in there. Dave Barry. Our new constitution is now established, everything seems to promise it will be durable, but, in this world, nothing is certain except death and taxes. Benjamin Franklin, Letter to Jean-Baptiste Leroy, 1789 November 13. Our tax code is so long it makes war and peace seem breezy. Stephen Latourette. People who complain about taxes can be divided into two classes, men and women. Philosophy teaches a man that he can't take it with him, taxes teach him he can't leave it behind either. Mignon McLaughlin, The Second Neurotics Notebook, 1966. Pothinus. Is it possible that Caesar, the conqueror of the world, has time to occupy himself with such a trifle as our taxes? Caesar, my friend, taxes are the chief business of a conqueror of the world. George Bernard Shaw, Caesar and Cleopatra. Rightful taxation is the price of social order. In other words, it is that portion of the citizen's property which he yields up to the government in order to provide for the protection of all the rest. It is not to be wantonly levied on the citizen, nor levied at all except in return for benefits conferred. Journal of the Senate of the State of Ohio, being the first session of the 46th General Assembly, held in the city of Columbus, commencing on December 6, 1847, Vol. XLVI, reported by M.R. Archbold. Taxation is the price which civilized communities pay for the opportunity of remaining civilized. Albert Bushnell Hart, Actual Government, 1903. Taxation with representation ain't so hot either. Gerald Barzin. Taxation, for example, is eternally lively. It concerns 9/10 of us more directly than either smallpox or golf and has just as much drama in it. Moreover, it has been mellowed and made gay by as many gaudy, preposterous theories. H.L. Mencken. Taxation is the price which we pay for civilization. Journal of the House of Representatives of the State of Vermont, October Session, 1851, Report of the committee appointed by the Governor to take into consideration the financial affairs of the state. Taxes grow without rain. Jewish proverb. Taxes are paid in the sweat of every man who labors. Franklin D. Roosevelt. Taxes, of life's two certainties, the only one for which you can get an automatic extension. The best things in life are free, but sooner or later the government will find a way to tax them. The point to remember is that what the government gives it must first take away. John S. Coleman, Address, Detroit Chamber of Commerce, 1956. The United States has a system of taxation by confession. Hugo Black. The government's view of the economy could be summed up in a few short phrases: if it moves, tax it. If it keeps moving, regulate it. And if it stops moving, subsidize it. Ronald Reagan. The expenses of government, having for their object the interest of all, should be borne by everyone, and the more a man enjoys the advantages of society, the more he ought to hold himself honored in contributing to those expenses. Anne Robert Jacques Turgot. The purse of the people is the real seat of sensibility. Let it be drawn upon largely, and they will then listen to truths which could not excite them through any other organ. Thomas Jefferson. The taxpayer, that's someone who works for the federal government but doesn't have to take the civil service examination. Ronald Reagan. The politicians say we can't afford a tax cut. Maybe we can't afford the politicians. Steve Forbes. The flat tax would be so simple, you could fill it out on a postcard. A postcard that would say, in effect, having a wonderful time, glad most of my money is here. Steve Forbes. The sales tax seems to be more politically acceptable than the income tax. Raymond C. Skipatch. The income tax has made more liars out of the American people than golf has. Even when you make a tax form out on the level, you don't know when it's through if you are a crook or a martyr. Will Rogers. The income tax created more criminals than any other single act of government. Barry Goldwater. The wages of sin are death, but after they take the taxes out, it's more like a tired feeling, really. Paula Poundstone. The nation should have a tax system that looks like someone designed it on purpose. William Simon. The art of taxation consists in so plucking the goose as to get the most feathers with the least hissing. Jean-Baptiste Colbert. The payment of taxes gives a right to protection. James M. Wayne. There is an ancient belief that the gods love the obscure and hate the obvious. Without benefit of divinity, modern men of similar persuasion draft provisions of the Internal Revenue Code. Section 341 is their triumph. Martin D. Ginsburg. There may be liberty and justice for all, but there are tax breaks only for some. Martin A. Sullivan. There's nothing wrong with the younger generation that becoming taxpayers won't cure. Dan Bennett. Things as certain as death and taxes can be more firmly believed. Daniel Defoe, The Political History of the Devil, 1726. To force a man to pay for the violation of his own liberty is indeed an addition of insult to injury. Benjamin Tucker, instead of a book. Today, it takes more brains and effort to make out the income tax form than it does to make the income. Alfred E. Newman. U.S. Internal Revenue Service, an agency modeled after the revenue-raising concepts of the 19th century economist, Jesse James. Robert Brault. Unquestionably, there is progress. The average American now pays out twice as much in taxes as he formerly got in wages. H.L. Mencken. We must care for each other more and tax each other less. Bill Archer. We are told that this is an odious and unpopular tax. I never knew a tax that was not odious and unpopular with the people who paid it. John Sherman. What at first was plunder assumed the softer name of revenue. Thomas Paine. What is the difference between a taxidermist and a tax collector? The taxidermist takes only your skin. Mark Twain, Notebook, 1902. When there's a single thief, it's robbery. When there are 1,000 thieves, it's taxation. Vanya Cohen. Why does a slight tax increase cost you $200 and a substantial tax cut save you 30 cents? Peg Bracken. You must pay taxes. But there's no law that says you gotta leave a tip. Morgan Stanley advertisement. This is a question too difficult for a mathematician. It should be asked of a philosopher. Albert Einstein, about filling out his income tax form, 1944. Chapter 5. A World Tax Guide. American Living Abroad Income Tax. If you stay 330 out of 365 days out of the USA, your foreign earned income is free of income taxes in the USA. irs.gov/taxtopics/tc854.html. Also 855. If you permanently relocate to another country, you will have to pay U.S. income tax as long as you have an American passport. People who have not filed income tax returns for several years have flown in from a foreign country using an American passport and were promptly arrested at the airport. This usually happens to rich people. Form 2555EZ can provide a big income exemption if you spend at least 330 days of a consecutive 365-day period off U.S. soil. So if you spend 35 days or less in a given 12-month period in the U.S., you get a big tax exemption. irs.gov/publications/p54/index.html firstgov.gov/topics/americans_abroad.shtml irs.gov/faqs/faq13.html StoneTaxAdvisors.com. World tax websites. pinkernel.de, tax link, links to German and international tax sites. taxsites.com/international2.html, international accountant. worldwide-tax.com. lowtax.net. tax-news.com. lowtax.net. tax.org, tax information worldwide. hg.org, international tax coverage in 5 languages. tax-news.com. www.ebtax.com. ey.com/global. wtexecutive.com, World Trade Executive. ird.government.nz. en.wikipedia.org/wiki/tax_rates_around_the_world. taxsites.com/international.html #sign countries. tax.org. tax.org/international/bwtc, basic world tax code. worldwide-tax.com. ato.gov.au, Australia. cra-arc.gc.ca, 800-959-2221, Canada. inlandrevenue.gov.uk, Britain, links to tax departments of different countries. ird.government.nz, New Zealand. taxback.com, tax refunds worldwide. BDO Stoy Hayward Financial Services. 020-7486-5888. Expat at bdo.co.uk. bdo.co.uk. BDO Auxiliary Ilia.at, Austria. bdo.be, Belgium. bdo.ca, Canada. bdo-cf.lu, Luxembourg. bdo.ch, Switzerland. bdo.com, United States. bdo.com.hk, Hong Kong. bdo.com.sg, Singapore. bdo.cz, Czech Republic. bdo.de, Germany. bdo.dk, Denmark. bdoegypt.com. bdo.fi, Finland. bdo.hu, Hungary. bdomel.com.au, Australia. bdomexico.com. bdo.nl, Netherlands. bdo.no, Norway. bdo.or.jp, Japan. bdo.pl, Poland. bdo.se, Sweden. bdospicers.com, New Zealand. bdosx.ie, Ireland.